Hello guys, this is a very important subject. You see it always online, and each year the people they try to predict that there is a crash in the market, and they are waiting for this crash. Okay, so it's just anyone is talking about this because when they see that the stock market was doing so good in many years, they know that there will be a crash in the market, or what we call either small correction or a big correction, but no one knows when. But the people they predict each year. It means if it happens, you say, "Oh, didn't I tell you the market has crashed? I tell you last year." But these guys who talk about the crash, they talk each year. Okay, so whenever the market crash, they say, "Okay, I told you last year." So let's go and check. I just make 3 examples for you guys. 3 stock market crashes in the United States of America. So let's go and give you an idea, and then we can go to the chart. Okay. So let's go to the okay. As you can see here, the major USA stock market crashes. So the first and the biggest one is the stock market crash of 1929. This is the biggest and the well-known crash in the United States of America. Okay, so the index of Dow Jones. Okay, so all this information is from Dow Jones. Okay, Dow Jones Industrial average. Okay, so the high in 1929 or 1929, it was $386.10. This is the high what the market has reached. Now, after 4 years, in 1932, the Dow Jones Industrial was only $40.60. You see how much is destructive this crash. It is one of the biggest crash in the USA history. Let's say you bought a stock at $386.10. After a few years, you hold it and it is $40.60. Now, most of the stocks have gone that way. Okay, not all of them, but most. And some companies, they go bankrupt. Okay, so this happened in 4 years. It means it's not only 1 year, but it's going from 1929 to 1932. And we have what we call, after this, we have what we call in USA the Great Depression. Okay, the Great Depression, where a lot of or millions of people, they lost their savings, they lost their stocks, they lost their jobs. It was a very bad years, all these years, and then we have the World War II, so which makes it worse. So until it happens, the market gained the 386.10. Only in 1954 we see this price again. So you should wait from 1929. Okay, so it's like 25 years. 25 years. Let's say you bought the stocks at $386.10. Let's say you bought this index, which is an ETF. So it goes to $40.60 in 1932. So you should be waiting until 1954. It means 25 years waiting until you get your money back. But understand that if you are, for example, you are investing in companies, some companies, they go bankrupt. Okay? Now let's go to the second one, which is stock market crash of 2000. So this is for 3 years. Now this is less destructive as the first one. So the high of 2000, the stocks were the Dow Jones was 11,550.28, and then by the low of 2002, it goes to $7,197.49. Okay, so 3 years. Most of the you lose like not like here, which was destructive, but here you lose like, let's say 45% or so. Okay, you can just do the math. It's nearly 45% loss. Now we have the third one, stock market crash of 2008. It is only in 1 year. Okay, in 1 year, the stock was 13,279.54 in the high of 2008. The low of 2008 was 7,749.38. It's nearly, let's say 48. It's nearly 50%. You see, these are the biggest crashes in the USA stock market. Understand that people, they lost almost all their wealth. They lost their savings. They got maybe they lose their jobs. It's a lot of trouble. Okay. Now, since we have explained all this by just giving you numbers, so let's go to the chart. Okay. So right now, let's go to the chart. I will show you the yearly chart, how this happened. Although it doesn't look that big, but let's check it. Okay, so this is a chart. This is a yearly chart. Dow Jones 30 Industrials. Okay, now the years that we are speaking about are these. Here in 1929, you see them very small, but understand this is because of the price of the index at that time. Okay, as I told you, in 1929, the highest was 386.10, and then after 4 years, we go to $40.60 in 1932. This is the lowest that you have. Okay, and then we can go here, which is 2000. Okay, the highest was $11,750.28, and then it goes in 3 years, it goes down to 7,197.49. And then you see the biggest here, as you can see, which is 2008. Okay, so this is in 1 year only. It goes from 13,279.54 cents to 7,449.38. Okay, so this is the biggest three that I choose. There are other major crashes, but I don't want to show to you. I just showed you the most, and the biggest one is 2008, as you can see, in terms of the chart, as you can see. So the market is going so good from 2008. It means 2009, it has gone lower, 6,469.89, 85, but it goes up from 10,000 now to 26,392.79 cents. You see how big is this trend. Now that's why the people are always try to predict that there should be a correction. Okay, that's it for this thing. This is just to show you that when the market crashes, a lot of things happen in the market. Okay, a lot of things happen. No one knows what's going on. Just the stocks are going down, but There are reasons for that. There are reasons for that. But, you know, in the stock market, it's a stock market of secrets. You will never know what's going on at the back. So who put the market down? Okay? And why the people are selling? It means if they don't sell, the market will not go down. But why the people are selling? This is major reasons that we will study in these videos. Okay, so thank you very much for watching. Please watch the next video.